Everyone should have an umbrella policy. People typically think, the more money you have, the more you have to protect. But the biggest thing that most people aren't aware of, and the reason why everyone should purchase a personal umbrella policy, if you own properties in a business name, then you need to have a commercial insurance policy. You should consider it with the fact because the umbrella policy is going to give you additional liability on top of whatever liability the policy already has. So typically, homeowners, landlord, dwelling fire policies are going to have 300,000. Base policy automatically start with 100,000. We recommend usually at least 300,000 because if you don't have 300,000, you're not eligible for an umbrella. So we recommend everybody has at least 300,000. And then on top of that, you can purchase an umbrella, $1 million, some companies up all the way up to $10 million of additional coverage in the event somebody gets injured on the property, near the property, anything related to the property, and sues the property owner for any reason.
Okay, now it might have sounded like simple to you, but like for everyone else, let's just give examples. So you got like 123 Main Street, 124 Main Street, like 125 Main Street. You have they're owned by different LLCs. Tell me more and describe how they're ranked.
To give you an example, and that's something, we talked about sharing things. I've got some really good examples of potential umbrella claims. I don't know if there's a way to share documents. We can add it to here somehow. I'm happy to share some examples. And that's something that I try to do with our clients when we issue a new policy. Here are some things you should consider, be aware of when you're thinking of liability. So for example, I'm right here on Central Avenue, Lancaster. If somebody comes into our building to get insurance and they trip on the doorway and they break their hip, break their leg, something significant where they then need medical hospital treatment for a long time. We have, say, if we only had 100,000, 300,000 liability, it's going to pay for all their expenses. But then they're unable to work and their life has been changed so drastically. Maybe they injured their face and they've got medical issues. Now they can go, there's plenty of companies out there. You can, if you listen to advertisements, 888, dial 8, dial 4, they're looking for people to file a claim and they could be awarded millions of dollars. If you don't have the right amount of coverage, then they can go after, if it's a business, they can go after the business assets, including the building itself, and that in a judgment that could be awarded, you're required to sell and pay out part of that. And they can also, more importantly for individuals, they can go after your future wages. So they can garnish your wages for the rest of your life. And even if you don't have much now, maybe you will in the future, but think about child support for the rest of your life. They could take 17% of your salary off and you're going to have to pay that out every paycheck to pay for those damages that you caused. Having that umbrella policy gives you additional liability to protect you in the event there's a lawsuit and they try to go after awards for judgments.
Now, for my properties, just to show you how little knowledge I know of this, my properties have umbrella policy, correct?
Currently, I think most of your properties are like 300,000 of liability. Depending on the company, some of them will offer up to 500 or $1 million. But in general, if it's owned under an individual name, then you can cover it under personal umbrella, which is a completely separate policy. With, I believe, most of your properties, you own them under LLC names, which you would have to have a commercial umbrella, which I don't believe you currently have. Something that we could definitely quote. Just to kind of give you an idea, a personal umbrella, home, auto, if you have rental properties, depending on the situation personally, usually start around $150, $200 a year for that additional $1 million of coverage. When you go commercial, it's a little more complicated. It depends on the details. Sometimes 500, maybe $1 million, $1,000 to give you an additional $1 million of liability. So those are all things that definitely to consider, and we could talk about it at a later date as well.
Got it. Now, I don't know if this is a factor, so I want to get your expertise, advice on this. So most of my properties are leveraged 80% LTV through the banks. Now, let's say someone trips and falls, and their attorney sees that the property is being leveraged 80% and there's only 20% equity, does that mean that I don't need insurance or I need less insurance? Tell us more about that.
Okay, so two different aspects that you got to think about. So the equity is the structure, the building. So say you own a property, it's $100,000. You say you own 80%. So the bank owns 80%. You own 20%. You're paying that mortgage off. What's going to happen in the event of a claim? If there's a fire, what's going to happen is the bank's going to be paid first, and then the remaining amount will go to you. That's why it's very important they require to be listed as a mortgagee. If they're not listed on there for whatever reason, they're not going to get paid anything. So that's why it's very important that they are listed on there properly. It's a little bit different if, say, somebody trips and falls. That's not going towards the property directly. What's going to happen is the liability portion of your policy is typically $300,000. That's going to be paid towards the injuries. And then on top of that, if you have an umbrella, or if it exceeds that, then you can go after individually. But the mortgagee really can't be sued for an individual getting injured on the property. It's really, they're protecting the building itself. So most mortgage companies don't even care if you carry liability insurance. We can write policies with just building coverage, but that's not something we typically do because you want liability coverage in case somebody gets injured, and it's usually the cheaper portion of the premium anyways.